Greetings and thank you for joining us at futuremoneytrends.com. I have what is probably the best gold deal you can look at right now. And anyone who's been subscribed to our membership for the past year, you have seen a ridiculous surge in the precious metal sector, which is leading the resource shares out. And I am literally just blown away by this company. It's, the only way I can describe it is it was built in the bear market and it's going public in the bull market, the birth of the gold bull market. Very serious mining people behind it. You've got resumes with Barrick Gold, Doug Kerwin, who's credited with the largest gold copper discovery in the world. And here with us today is Ian Stalker. And he was the chief executive of Untitled Inc. It was later acquired for $2.5 billion. Very successful junior. 40 years of experience in mine development. The company has a very rare situation. You just do not see companies with high-grade gold and a large deposit, with production beginning very soon. You will see this company rapidly develop into a mid-tier gold producer. In 2016, this is going to happen like literally right now this year. And it just started trading days ago. Happy to bring K92 Mining. The ticker symbol on the TSX Venture is KNT. And with us to talk about it is Ian Stalker. Ian, thank you for joining us.
Thank you, and thanks for that introduction.
Well, Ian, let's start off with the company because it really is an amazing deal that you guys have formed, and I want everybody to fully understand this. Our readers are very in tune with the gold market, with what's been going on in the gold shares, and to fully appreciate this deal, if you could just take us and kind of walk us through it, where this deal was essentially put together at the bottom, at the worst part of the bear market, and now you have just gone public. And I mean, it seems like it's all upside for our readers from here, for investors looking at the company. So K92, introduce us to K92 Mining, please.
I will do, and you're quite right. The old adage that timing is everything is very applicable to our company K92. If I start initially by just demonstrating that when Barrick acquired this asset, and remember Barrick is the world's #1 gold mining company, so you couldn't ask for a better owner. They acquired it as the cycle was really booming in 2007. But unfortunately for them, as we all know, the financial crisis hit in 2008 and 9, and along with the various other inside operational issues, Barrick decided to exit from this company around about 2013. And that's when we first started hearing about it. We acquired the property itself in 2015, which was acquired when we got the renewal of the mining license. So this operation, which we now own, K92, is fully licensed, it's fully permitted, so it's ready to go, just as you mentioned in your introduction. There is no legal hindrances to it. And we acquired it then in 2015. We became the owners of it. You're right in indicating that at that time the market was already bad, and for the next 9-10 months or so, it didn't get any better. In reality, it deteriorated to the extent that even with a great asset that we had, I have to admit, we found it very difficult to get the funding. But at October of 2015, we were fortunate enough to attract the attention of a New York-based equity firm, who liked the project that we presented to them, liked the team that were running the project, liked the background behind us and our ability to move properties like this forward with a very positive and very, I think, market-orientated approach. And so they came in and we were able to access 10.5 million Canadian dollars from that company that we then supplemented during the early part of this year to bring in a total of approximately $16 million, which is more than enough for us to rehabilitate what was an already existing mine, as I mentioned, owned by Barrick back in 2007, end of 2007, all the way through until we acquired it. A mine that was built by reputable engineering companies out of Australia, It's obviously in that neck of the woods where Australia's got a significant amount of influence. And we have been busy with the rehabilitation and restart of this mine to the extent, you're quite right, and again in your introduction, and thanks for that, that we expect to see the mine being load tested next month, June of this year. It's only 2.5 weeks away. We've been busy since we got the money in February. We're comfortable in saying that, and we expect our first production in terms of the first concentrate in a volume and size that's appropriate for export being available for shipping by the end of August 2016, which again is only 3 months away. So we're pretty primed and pretty pumped to get this thing up and running. And of course, the big difference, I guess I just should close in answer to you, the big difference between ourselves and the previous owners is that our focus is on the restart, getting this new mine up and running as quickly as we can and as efficiently as we can, learn from some of the historical issues that were there previously, put the procedures in place to mitigate against them, and get this thing churning out some decent return on investment as soon as practically possible.
What's your expected cash cost? And if I think our readers would love to know, what did Barrick pay for it, and what did you guys pay for it?
Well, let me start with the second part of that question first. Barrick picked the property up for $141 million back in 2007. And they then proceeded to spend on it a significant amount of capital because, again, their driving force in those days was the exploration potential that exists on this property. We have 400 square kilometers of ground under our control and management, and they, at the time when they picked this property up, they saw the opportunity of a much larger operation, which is why, as I mentioned earlier, their focus was on really exploring the property, getting more value unlocked as a consequence of that. So the small mine was a convenience, and a convenience from them to get money into the local communities, the local areas, and thereby improve their access to the ground, and they did that successfully. Our focus is somewhat different. Our focus is getting that small mine operating as efficiently as we can, because we know we're a junior and we don't want to dilute ourselves going forward. So our focus is getting that kicked off. And getting back to the first part of your question, we see our cost profile being in the lower quartile, roughly around $620 per ounce as a cash cost, with an all-sustaining capital at the moment, all in the sustaining capital cost with the OPEX of about $660.
That's an incredibly low cash cost. And you said Barrick paid $141 million. And what did you guys pay? We
paid $2 million for this deal. We got it at just again, relating back to your first question, we got it at the right time in the marketplace. It was a major wanting to exit, which is a recurring theme in many of the mining commodity spaces that we all see and we all understand. They were going back to their basics, which was good operations within North America and less demand from offshore operations, shall we call them, and also the fact that they had got themselves into a bit of financial concern regarding the size of their debt book. So for us, we got it at a really, really good value price.
Yeah, and I've never seen such a group of serious people behind the company. Usually you have like one guy or two people, but it's you go through the bios of K92 Mining, and it's incredible. Can you just talk briefly about some of the people that you guys are working with?
100%. You've nailed it 100%. The way to make a project work and to make a success of a mining operation is not just about the basic asset itself. It's having the right skill sets to unlock it. And we've been very fortunate, and I've been very fortunate in having a team working with us, and one we've put together that has a range of skills, not only from operational or from exploration or from marketing skills, but also as a chairmanship. We have a range of people from Tuki Angus, the chairman, and Tuki is also the chairman of Nevsun, one of the larger copper gold mining companies here in Canada with an asset in Eritrea. We've got John Lewins, the COO. John's got a wonderful background and experience in operating mines in relatively remote locations, so that gives us a lot of skill sets in there. Brian Cesarchuk, and the two guys that I think are worth mentioning, of course, are the two exploration guys. One is Doug Kerwin, and Doug is the guy who, as you mentioned, was attributed the success of the major find in Mongolia with Robert Friedland and his team back in the day, and that was called Oyu Tolgoi. So Doug has got a great reputation. He's a gentleman of sufficient age that he doesn't need to arm wave about potential, etc. He's a very disciplined, conservative geologist and his view of our project from an exploration potential, near-term exploration potential, which is really the Cora asset, which comes into operation after we complete our first 2-3 years of operation in Fimpa. He believes that the opportunity for Cora is it can grow significantly. As I mentioned, he doesn't need to arm wave, which is, for me, a great deal of, if you like, added value. I like conservatism in this project. Miners by nature are conservative, and I think we've been through our whole life structure and the way we've approached this project as well on a conservative basis. And then we have Alex Davidson, also on the advisory board, who is also a recognized geological expert in his own field. And he was the individual that drove Barrick into the process of purchasing this asset because of the exploration potential, because of the geological endowment that exists in the country. Where we sit, we're only about 80 kilometers away from a mine that has approximately 17 million ounces of gold in resource. Barrick itself has the Pira mine, which is producing 600,000 ounces of gold a year, plus or minus. And then there's a range of other large mines. So we're in an area where small mines are more the anomaly and large mines are more the normal. And so Alex believes that opportunity exists. And so when we took over this project, I'm delighted to tell you and your colleagues that Alex joined us within a matter of days of us acquiring it, because he still believes the opportunity that he saw back in 2006 is still the same opportunity there today for the exploration potential. So a great team with a great deal of skill.
No, it's truly incredible. And, I would be foolish not to ask you about the junior and gold market itself. You've been in this market for 40 years. You've seen so many cycles. How do you feel about this market right now? And what for investors who've been investing for the last few years, what is to come on these cycles the cycle that we've just been through?
Well, I guess one of the things that I've learned over the period of time I've been in the mining environment is that there is always the need for new operations. Whether we have a large amount of demand or a relatively medium size of demand, there's still demand. And so gold is, in inverted commas, consumed, stored, jewelry, whatever it might be. So there's always the need for fresh mines coming on. And this operation that we have is effectively a new mine that's restarting. So I believe in terms of the overall market, Daniel, you were right about having seen a few cycles in my time. What I can say is that I believe the gold market that we have experienced in the last few years has been horrendous. It's been difficult. It's been tough. I don't know of anybody or any company that hasn't suffered. But right now, that has changed. The environment has become more positive. There is a need for mines to progress and produce, I think, gold at an attractive price. I think most miners have learned that you have to do it economically, that you don't spend for the sake of spending anymore. And our approach to this market that we've understood, and I think we've caught the right timing on it, is that we are there to produce gold at the right price and at the right level. So I think from an investment point of view and also with the market background, Daniel, that we've, again, got this timing and approach right.
Well, Ian, thank you very much. I look forward to this deal. Going to definitely be out there buying shares on the open market, along with many of my readers. You guys have an exceptional opportunity here at basically the birth of the bull market, and I look forward to watching K92 Mining develop into a mid-tier gold producer. So that's K92mining.com. You can buy shares under KNT on the TSX Venture, and we'll also get the OTC symbol, which I believe will probably be usually they get one on the grays when a TSX Venture stock goes out, and then in a few weeks or a few months, maybe at the most, they'll be on the QX. So, Ian, thank you so much for joining us. I really appreciate your time.
No, thank you. It's been appreciated.